Representative Scherer.
Thank you, Mr. Chairman. Thank you, Senator. Thanks for describing Chairman Beck and my lifestyle to just prove how boring a life that we have. Mr. Chairman and members of the committee, I'm, as you may know, new to this legislature. I was appointed just a little over a year ago. I've never having been in any elected office before. The game of politics or the industry of politics and legislation is totally new to me. But what isn't new to me is taxes. For 35 years, I've been a practicing CPA. I've prepared all levels of tax returns for individuals and businesses. Currently, I'm the owner of tax offices scattered throughout Ohio that prepare myself and my employees prepared about 18,000 tax returns for Ohioans last year. So I do know something about taxes, and that's why I was very excited to be invited into the discussion to help craft, along with you, Mr. Chairman, and the leadership group that has put this together. I am, because of that experience in 35 years in the tax industry, I am completely, totally convinced that this package benefits all taxpayers in Ohio, every single one. Starts out with, as you already know, a rate reduction. Gets to a 10% reduction by year 3, phasing it in 8.5% in the first year, 9% in the second year, and 10% in the third year. It does eliminate our current low-income tax credit that is actually built into the tax tables and nobody really even knows is there. But it replaces it with in my opinion, a more beneficial state earned income tax credit. There is a federal earned income tax credit, as you probably know, and the state calculation will be based off of that federal one. By the way, of the 18,000 tax returns that my staff and I prepared this past tax season, about 10,000 of those were subject to the federal earned income tax credit. So when I say I know this is going to benefit all Ohio taxpayers, I know that from personal experience. The state credit is going to equal 5% of the federal earned income tax credit, unless the taxable income is over $20,000, and then the credit will be equal to 50% of the tax liability. In many of those cases, most of those cases, reducing their tax down to zero. It also includes the small business income deduction for pass-through entities, which will exempt 50% of the first $250,000 worth of income. From my experience in preparing small business returns over these 35 years, that's some real dollars. And these are, as we all know, where the real jobs are created are in small businesses. It's just a tremendous move, in my opinion. We will, for 3 years, suspend the income tax bracket and the exemption inflation indexing that's been built in. It's a 3-year suspension only, which makes sense because we're reducing the taxes over the 3 years. We do repeal the 20% personal exemption credit, greatly offset by that earned income tax credit provision. We will repeal the pending or the upcoming planned income tax deduction for wagering losses. That has not been a deduction up until this point, but effective for 2013 tax returns, it was to be a deduction. And the deal there is it is a deduction, it's an itemized deduction for the federal purposes up to the amount of the losses, and it had been proposed to allow that over on the federal, but this in essence means no change from the current law. There is, as you know as well, a very slight rate increase in the sales tax, 1/4% increase. The digital products that are currently not subject to sales tax will be subject to sales tax, and these are digital books and games, and I think even the all enjoyable downloaded ringtones that we currently have. Magazine subscriptions will the exemption that currently exists for those will be eliminated. The commercial activity tax, businesses is contributing to this overall tax cut by the reduction of the $1 million exemption in the CAT, reducing that down to $500,000 instead. On the property tax side, the homestead exemption will revert back to the way it was a few years ago, which means it was means tested. The wealthier people will not have the advantage of the excluding $25,000 of value for residential property, their main dwelling. The property tax rollback limitations, Senator Weider mentioned that and explained that, of course, would only affect new or replacement levies, would not affect existing or renewal levies. This has been referred to, and I think aptly so, as truth in taxation legislation. Lastly, it does equalize or bring into the excise tax realm the tobacco product called a little cigar, and that little cigar is defined in the legislature. Mr. Chairman, that's all I have.
Thank you.